Okay, all right. Good afternoon, everybody. Thank you for coming. Thank you, Harris. Thank you, Menachem. I didn't know where my athletic record is on the internet, but it seems like a long time ago. I'm happy to talk to you today about Firstrust Bank and kind of history of my family. I think that the story of Firstrust is really, it's a great Philadelphia story, and it's a great American story. I was, my grandfather, who came over to this country at the turn of the century with that wave of immigrants. He was studying to be a rabbi in Hungary, and he was the oldest of 7 brothers and 7 sisters. And his father had brought over everybody else. My grandfather was very hesitant to come over because from his standpoint, things were pretty good over there as a yeshiva booker. And he needed to be convinced. And so what happened was he said to his father, well, I'll come over, but only if I get a round trip ticket, unless in case I don't like it. So under that premise. But here's a part of the story. So in those days, there's a company, another great Philadelphia company, Rosenbluth Travel. Well, Rosenbluth got started basically by providing passage to mostly Jewish immigrants to this country. But what they didn't know, or what I didn't know, was that they also financed those tickets. So my grandfather came over here on a ticket financed by the Rosenbluth family. The reason I bring that up is because in the early 80s, when there was actually it was the early 80s, but I would say probably more like 2000. Rosenbluth Travel, which was a powerhouse business here, got into a lot of trouble post 9/11, and I had the opportunity at that time to have the 4th generation of the Rosenbluth family come to me and say and ask for us to help them finance their business, which we did, and ultimately they sold to American Express as a much stronger organization. But the point I wanted to make was that when Hal Rosenbluth came to see me, I told him the story that my grandfather had come over on a ticket financed by him, and he had paid them back. So I told him that I was pretty sure that he would do the same, which he did, and it worked out. But that's you can start to get a sense maybe of the origins of kind of how we got started. So how did we get started? My grandfather, he taught himself English at the Free Library here at night. He sold shoes, he sold insurance, he sold pretty much anything he could sell. And he found that the commercial banks at that time, they and this is now in 1929, right at the Great Depression. He found that commercial banks would not lend money for residential mortgages. So there was a kind of the essential story of the origins of Firstrust, where that there was a man who worked for the post office, 30-year employee, family man, steady income, and he just could not get a mortgage for his house. And my grandfather at that time said, well, somebody should do that. And as was his way, he decided to be that somebody. So in the heart of the Depression, 1934, in what was my great-grandmother's kitchen in South Philadelphia, Point Breeze Avenue, where we still do business today, was where Firstrust was born. My dad was born in the apartment above it, and that had to get together $7,500 in deposits, where my grandfather would go door to door, say that if somebody put $5 in deposits, he would match it, and that's how it got its beginning. So to start a bank in the heart of the Depression took some courage, took some vision, but he enjoyed a great reputation in his community. Over the years, we were able to grow and prosper as our community did. And in 1959, we moved out to the Northeast, Castor and Cotman, and continued our growth. My dad, and by that time, after the war, my dad had he came out of the Wharton School, and he was in the Army, and came out of that and finished law school at Temple at night, and came to work for his dad, and continued to grow the business. In 1978, I came out of graduate schools and came to work for my dad, and I came as the general counsel to the bank, and did pretty much everything. We were a much smaller organization, but got to learn the banking business that way. In the meantime, kind of a seminal event in my family's history, in this history, was, I should say this. So when I went to talk to my dad, you may appreciate this. So I talked to my dad and I said, well, I'm coming out of, I've got all this fancy education, and so let's negotiate my salary. And he told me, he said, well, $18,000 a year. And I showed him all the data and the charts, and that showed that my peers that were making like 45,000, something like that. And he said, yeah, that's right, but $18,000 a year is what the offer is. So I said, well, I'll think about it. And I came back the next day and I said, okay, I'm going to do it. I said, you want me to join you in another get-rich-slow scheme? He said, that's right. That's what I want to do. So in 1987, as a seminal event in my family's evolution, we were able to convert what was then a mutual savings loan into a commercial bank, and to do it in a way we never needed capital. We managed, as a family, we managed the bank. We didn't own it, and we were able to convert it and essentially go public and private in the same transaction. And as a consequence, my dad and myself were able to buy the bank in what was then a leveraged buyout at the time. I had done, I'll come back to this theme in a minute, but I had done my master's at the Wharton School, my master's thesis on converting mutuals to stock institutions, with the idea in mind that at some point maybe I could use that information, and lo and behold, because there's not a lot that I learned at school that I can convert to actionable information, but this was one, and it happened to be a pretty good one. So that coincided with the fact that when I did that, and looking at the business, basically our model our business model, I thought was not sustainable. And so really this started, say, from the time I started full-time at the bank in the late 70s, that we tried to basically reinvent ourselves into a full-service commercial bank. I had grown up and for those of you who are old enough to remember, but I had grown up where kind of the real banks, if you will, were the old Continental Bank, IVB, Central Penn, Provident banks. Those were what I considered to be kind of the essential. They represented to me kind of the essential elements of what banking was, and mostly that had to do with the leadership at those banks. That there were places where entrepreneurs, family businesses, professionals had a personal relationship with their bank, and that they could call up for a situation and basically they could get what they wanted on a handshake. And I thought, that's pretty cool. I'd like to be able to do that. I'd like to be able to, if I can make, that to me was a good way to think about what I might do for a living, which is to evaluate the character as well as the collateral, and the ability to repay, but to evaluate that and to be able to build a business around that and help people grow and grow their thriving enterprises. So we then embarked on really a program to reinvent the bank into a full-service commercial bank, and along the way, here, as Harris mentioned, I always have to travel in packs because I'm worried about a lot of things. But I'm fortunate enough to have a great staff to help me fulfill this vision of converting us into a full-service commercial bank, which we have done and done fairly successfully. Our focus is really on just that niche, which is on family businesses, about which we know a lot, on mid-sized businesses, professionals, and entrepreneurs. So that's the course we've been involved in. As Harris mentioned, during the financial crisis, the Great Recession, as we now are privileged to be able to call what staring at the abyss looks like, in 2007. In the face of that, Firstrust, which had always been we always were strongly capitalized. We were able to navigate through that crisis without taking any government TARP money, without having to sell any key assets or take on any unwanted partners, and we came out of that period with more capital and more reserves, and much better able to serve our community. So that kind of brings us to the last year and couple years, and now we're in the process of reinventing Firstrust again. The challenges in the banking business are great. I'll talk about them more specifically later, but this process that we're engaged in now there's no question that banking is needed. The question whether banks are needed in the modern era is somewhat less clear. And so in a shift from a brick and mortar world to the mobile and internet space, as far as payments and credit go, there's a lot of work that needs to be done in our industry. And we at Firstrust are committed to reinvent ourselves in such a way that we will continue to thrive in the coming decades. We're able to do that because, one, we're committed to it. Two, that being privately owned and family owned and operated, it helps us to be able to focus on our long-term results. and we can make thoughtful investments for the future. And that has a lot to do with I think our ability and our managerial will to analyze the data and to take the action and make the investments that are necessary to do it. So that's kind of the Firstrust story. I was asked, one of the questions that I was asked was, to what do I attribute my success? That assumes an answer not in evidence, that I am successful. But if I take that at face value, I would have to say that one, I was blessed with a great family. I was blessed with the ability and the opportunity to get a great education, a great liberal arts education, a great professional education, and as a consequence, great opportunity. I'd like to think I took advantage of that opportunity and tried to build on the mentors and role models that my dad and my grandfather provided me. So that from a personal standpoint, I think that's kind of it. Commitment to the rabbi talked about the work. There's no substitute for hard work. So we at Firstrust have and as far as whatever success I've enjoyed, have the mindset that we set our goals, we plan for them, we execute against them. And the result is that we're kind of an 81-year-old overnight success. Getting rich slowly, consistent, persistent, managing risks within our capacity to absorb, strong capital and reserves, and trying to do the right things and then doing them right. All the while making sure that we service the needs of our customers, that we protect their hard-earned savings, and we have in our mission statement that our mission is to cultivate prosperity for our customers and our communities, and we know that when we do that, and we do it right, we cultivate our own as well. So I also have kind of I don't know what to call it, but I tend to turn my avocations into vocations, and so that's kind of how I wandered into the professional football realm. The question about where's banking headed? We have several representatives from several of our banking brethren here, and they can confirm or deny this. But I think that from my standpoint, the banking trends that we see, first, consolidation in our industry. We had only a few years ago 9,000 banks in the country. We now have 6,700. The rate of consolidation is about 3% a year historically, and I think that because of several issues, that there will continue to be consolidation in the industry because of the fact that, especially in a low interest rate environment like we have and have had, and it looks like we're going to continue to have for a while, there's considerable pressure on our margins. The regulatory burden involved in banking is another thing that will push consolidation. I know our compliance costs have gone up at least 100% over each of the past several years. You all have to do is read the paper and see where these fines are affecting everybody in the industry to know that, and with the addition of the Consumer Finance Protection Bureau, who has an unlimited checkbook and a clear agenda, that's going to that puts a tremendous amount of pressure on the business. The economy, which has been growing as of recently, is slow but increasing, and that's it. I'm of the mindset that really banking as a business is really a proxy for the economy. So if the economy is growing at 2 or 3%, you can expect banks to grow at 2 or 3% a year, unless they do one of two things. Either they take somebody else's business, or they take excessive risk. And while we've been fairly successful in the former, we don't like the latter. But the other trend in banking is clearly that related to kind of this reinvention of Firstrust, is that we know we have to enable the customer to kind of touch the bank in any way they want, whether it's branches or mobile, internet, phone, ATMs, or debit, credit cards, and the way in which they want, how they want, and how to transform our business so that we're customer-centric that way and can maneuver. That presents great challenges and great opportunities to us, and we are kind of looking forward to that. I was also asked about challenges for businesses in Philadelphia. Maybe I should stop first and say, take a moment to just appreciate what's been great about our region. We have a very diverse and broad-based economic base in this region. We're very fortunate. So that has helped. We're not really as susceptible to the boom and bust cycle as other places in the country, and that is a good thing. And a lot of great things, especially with respect to our university system. We talk about meds-eds. I used to talk about meds-eds and feds. I'm not so sure about the feds, but at least on from hospitals and emergency care facilities, educations, university, college systems, and all the supporting things that come with it. Tech, in this region, we have the Comcast Innovation Center that's going up, and Penn's Innovation Center, and biotech generally here. There's a lot of really good things happening in our region that will, and even a modest amount of manufacturing, but that's returning. So those are all positives. Our challenges are job growth. And while jobs are growing and the unemployment's down, wages haven't moved. There are different reasons why you think this may be. My own personal view about that is because wages have been flat because so many other things are taking up those dollars. Healthcare costs are rising. Employers have to absorb that. And uncertainty generally, then that's going to affect that. Fuel prices going down, it's kind of like a raise. Hopefully we can use that. But finding qualified labor, we know that our industry has found that we have fewer or as few employees that are much more highly compensated. We need knowledge workers to do that, and so that's finding that qualified labor is part of it. And one of the things that, because it's one of my pet peeves about this country and particularly the city's university system, is we have more colleges and universities than any other city in the country. We, as a country, we educate the world and then we ship them off, as opposed to figuring out ways where we should tie their being able to be educated at our schools to their staying around long enough to do it and to incent that. So there's been some discussion about that, and we're working on it locally, and hopefully we'll do more to attract and retain qualified labor. Slow economic growth, even if it's hard to figure out what the real economic growth number is for me, but say it's at 2.5%, 3%, that's still not as robust as we would probably like it. And in the city itself, we have our share of issues in the city. Probably the highest and most difficult one is our school system. And we've been very successful at attracting through either the tenure real estate abatement or through the development of apartments and the expansion in our neighborhoods, which has been just terrific. But we still have to grapple with our primary education and the issues related to that, because it's hard to say why you would want to raise a family in the city unless you have access to some of the charter schools, which do a great job, some of the select schools in town. So that's it. I think for opportunities, I think we said in meds, eds, tech, and their support industries, there are opportunities that abound in our region, and that's what I think. Somebody also was asked, well, where does Firstrust excel? I think I tried to talk to that, but I would just single out that when it comes to real estate, we were founded on real estate. My idea of a family outing with my father was to go look at real estate projects, so I kind of have that in my blood. And I would say that kind of pound for pound, our real estate group is as good as anybody in the country. We are also on the commercial side. Again, we bank a lot of family businesses. Family businesses are tricky for those of you who are engaged in that or know somebody who is. There's the family side, there's the business side. There's some, and I express it this way, that there's some things that in a family business you never have to think about that other people do, and there's some things that you have to think about that nobody else would. And how do you navigate that and still build a thriving enterprise is it. So we think we bring some value to family businesses because we have some firsthand experience with that, and we've seen a lot of it. And as far as family businesses as a market, in the U.S., at least half the businesses in the U.S. are family businesses. And from a global standpoint, there's estimates of somewhere between 70 to 80% of global GDP is generated through family enterprises. So we also have a strong presence in our SBA lending, but fundamentally, in terms of what we think we excel at, and where we have, I'm sure we fall down occasionally, but is just that we take care of our customers, and by taking a long-term view and treating our customers' money like it's our own, we do what's necessary to protect our depositors' hard-earned money. And in the financial crisis, the regulators, we chatted, and they say, well, how do you look at this? And I told them, I said, you're defined as much by what you choose not to do as by what you choose to do. And having, kind of the right compass about what's most important to us has been a keystone to that. I was also asked, well, what am I most proud of? And I think, Harris mentioned that, I had the ability to serve in Washington with Chairman Bernanke, and I'd like to say it was a total selfless act on my part, but there's that adage in Washington that if you're not at the table, you're on the menu, is one that kind of resonated in my mind, and I thought it might be better if I'm kind of there. I think I was both at the table and on the menu, but it seemed to work out. But I was very proud of being able to give back to my profession in that way, and to have some small part in helping to craft some solution to that. But mostly, I'm most proud of adding value to our customers and our community's prosperity throughout our long history, and being positioned to do that and to continue to do it. So that's the Harris was kind enough to mention some of my philanthropic work, which I take great pride in being able to give back there, and particularly with respect to Jewish Federation housing. We have where we enable Jewish elderly and poor adults to live out their lives in security and dignity. That's been a big focus for us, and combined with the work that I'm able to do at Penn Medicine. I don't know if everybody knows this or how common it is, but Penn Medicine represents 2/3 of the employees of the University of Pennsylvania and generates 2/3 of the revenue for the University of Pennsylvania. And since the University of Pennsylvania is the largest employer in the city, besides the largest private employer in the city, the ability to have a big impact on our economy. As far as an aspiration, I still am looking forward to riding in a parade for Super Bowl in Philadelphia. And but if you're a Philadelphia fan, you can appreciate it. You just have to. We as Jews know what it is to suffer, and but we always have hope. And lastly, from my standpoint, they said, "Well, do I have something important to say?" Well, I don't know. You'll judge that, but I do have this to say, and maybe somebody will find some use to it. Just dream big, and write down your goals. I give this. We've been giving high school seniors scholarships to college for the last 40 years, I think. Maria? I don't know if Maria, but somebody. It's about 40 years. We've got, and every year we give away about 40 scholarships in an award that's named in my grandfather's honor. And at the time when we give that money out, I say this to the students. I say, write down your goals. There was a Harvard Business School study that said that it's nice to talk about what you want to accomplish. It's nice to, nice to even say what you want to accomplish. But if you write it down, you stand a 900% better chance to accomplish them. So, anything that has a 900% return on investment always gets my attention, and so I would say that. And then the other thing is preparing yourself for success. And success in Firstrust case, in most cases that I've seen, it's it's not achieved by what you do, last week or last month. It's achieved by how you prepare yourself to succeed in the months and years before. And as I said, so since you're defined as much by what you choose not to do as what you choose to do, you should be thoughtful about that. So, be prepared, plan, be prepared to get rich slow, and embrace the journey, and have passion for what you do and with and for whom. So thank you for your time and attention, and if there are any questions, I'd be happy to try to answer.